Life moves fast, and so does your career. You've built a successful path, but now it's time to diversify your investments and secure your financial future. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you're time-starved with a family to care for and a demanding career to navigate, not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. At The Prestige, we specialize in serving professionals like you who seek safe and secure investments without the burden of becoming an expert in commercial real estate. With over 400 years of combined experience, our team of seasoned experts is here to guide you towards high return, high yield investments in a low yield market. We meticulously analyze market trends, assess potential risks, and identify lucrative opportunities, ensuring your investment portfolio is optimized for growth and stability. Here's a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting, and love the floor plans. We've got our distribution pending in our bank account. Thank you so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't let time constraints hold you back from maximizing your investments. Visit The Prestige at mayhill.com today for our current and rare investment opportunity, and let us leverage our expertise to secure your future. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your partner in commercial real estate investing.
Hey, everybody. Good morning. How are we doing? Good to see you.
Good morning. Good morning.
Yeah, yes, it's a good morning. We are having some excellent weather in the state of Texas. Beautiful day. And we were just talking about our groundbreaking ceremony. So we have that announcement coming up, and it's going to be shortly in under 2 months. So that'll be an invitation only. We have John, recently retired professional golfer who's looking to join us on that day. And I want to introduce John. John Mark is a big dog and also a co-general partner on our team with a very seasoned skill set in business development, which, you know, I'm an engineer. I don't have that stuff. So you guys have put up with my engineering philosophies, and and so now we're getting to have that great customer service attitude and business development to really scale the business, to build the fund, and to get that next property going. So we have a lot going on. I want to take a little bit of time, and we're going to talk today with John and our team about how to invest in your first commercial deal. Because, you know, John, it really breaks my heart that a lot of the syndicators have messed up the market. You know, people, God forbid, people have lost money, and we want to try to help in that situation. Of course, we didn't cause it, but, with 20 years of commercial real estate and construction experience, and our team has 400 years of commercial and construction real estate experience, we can help by teaching people how to do their commercial real estate due diligence. And AJ, let's be letting people in. Okay, great. So how to invest in your first commercial real estate deal. That's what we want to do. Hi, Christina. Good to see you. So we're going to get started today. We'll have about a 20-minute presentation on how to do your own commercial real estate due diligence. So I want everybody to please pick up your phone and open it up to your YouTube channel. And AJ, if you can put this information, that link in the chat room, in the chat window of how to subscribe to the Prestige at Mayhill. Just search for the Prestige at Mayhill and get subscribed, because we are teaching about commercial real estate due diligence. We want to save people from losing money with those syndicators because we're owners. And we're giving market updates. I saw another great indicator that rates are dropping and normalizing again. We got a soft offer for 8% on our construction loan. I am truly ecstatic. That's our second in the last couple weeks. And 4 weeks ago, I announced on our YouTube channel that I was starting to see those rates normalize. And we're very excited about that because 9 months ago, we had about 20 soft offers for our construction loan and they were just too high. So we were telling the lenders no, right? It's great to be in that position where our deal pencils in this crazy market. But we just said we're going to continue to raise private money and we're going to finish those entitlements. The property is right now worth $14 million and it has $1 million of equity for our private investors to attach to, and we have put that equity aside. Any new investors coming in, they're not going to dilute our current investors at all. And so a very exciting time for us because we pencil. Right? We pencil with these crazy rates, but rates have started to normalize. You're going to start seeing that as soon as the lenders admit it. So that's where we are on that one. Just to be honest, we don't mind letting them starve a little while so that they, start to be reasonable because we're so profitable and we're working so hard that why would we give up all of our profit to the lender? Yeah, we could do it, but why not just, wait a little bit and now we're ready to sign that contract and move forward. So without further ado, John and I are going to be talking today about how to invest in your first commercial real estate deal. Not necessarily ours. I don't know if we have anything for you. But what I would like to impart, is the education so that you have the tools in your tool belt to understand what a mediocre deal looks like and understand what a stellar deal looks like, what questions to ask. So let's get started. Let me share my screen. I'm not a PowerPoint guru from the beginning. Okay, can everybody see my screen? No, because I didn't hit share. See, I'm not a Zoom guru. I have to hit that green button. Sorry, that's on me. But I am an engineer and an investor, 20 years plus of commercial real estate experience. So we'll stick with that story. I don't know. It's a good day. We've been working on that golf tournament for our groundbreaking. Maybe that is happening. We're scheduling some fun. So we'll give a quick demo. We're going to have a Q&A after we turn off the recording, and we'll show you what a stellar deal looks like because you're going to have to evaluate 50 deals in this market to find a good deal. You'll have to evaluate 100 deals in this market to find a stellar deal. We want you to be comparing our deal to anything else that is out there because I know it's out there. Low margins, especially on a Class C renovation, overpriced. We'll discuss it. Okay. So why listen to us? I do have some credentials as a former engineer and the lead developer. I can do accounting at a CPA level. I've studied for my Series 66 under the SEC, got law license. I've studied for that, but I decided I don't need it to do what we're doing. So our property is worth $14 million. And the co-developer also has about 70 million assets under management. Good stuff. Our team, this is the most important thing, is our team has 400 plus years of combined construction and commercial experience in real estate. So team is one of the things that you want to look at when these deals are coming across your desk, right? We've raised 6.1 in private money. and we're going to raise a few million dollars more to just round out that capital stack. My first property was 16 doors. I've never done any single family, honestly. I did it on myself before it was popular to do it in partners. And I forced 80% vacancy and did the rehab with the guys. And within that first year, I had leased up that property and doubled the value of that property, from drug dealers to small working families, from predominantly heavy socioeconomic base to very diversified in terms of race, just very balanced, and it just did that on its own. So that was very nice. I'm also a Quest Trust IRA verified trainer. We're going to have a Quest Trust demo, a lunch and earn on April 20th at noon Central. So look at our Facebook page and sign up for that, or check your emails. And you want to be able to go to morefreedom.com to sign up for that, morefreedom.com. So, John, maybe you have some information about this because you're a seasoned investor as well, a big dog. And when you're looking at why would you take time on a Saturday? Why would you do something different to sit around your computer when it's beautiful outside? And you must have a big why. You know, are you wanting to shelter and protect your discretionary funds while you keep your job? Or look at me, you know, in 2005, I was an IT engineer and I saw the writing was on the wall. We had South Koreans and we had South Africans in our business that were third partying in. And I could see all these third parties as competition. And I said, hey, while my career is stellar and while I have discretionary income, I need to start diversifying in commercial real estate. And so that's what I did. So maybe think about who your competition is for your job. You know, they can buy 220s for 140-year-old. So maybe you want to get with your boss and say, well, it's with mixed emotions that I hand you my retirement letter, joy and happiness. I don't know, what's your why? We don't really have 401ks anymore. There's in the stock market. They're really a 201k, and we saw this happen in the 80s as well, probably in the 90s. I haven't had a 401k. You know, the bigger investors invest with cash. So, or would you like to really be able to spend more time with your children and your spouse, your family, your pets? What is it going to cost you to buy your time back? Probably the biggest thing that we need to think about today. Why would you do something different than what you're doing? So the topics. As a high income earner, do you feel like you're in a trap, in a rat race, trying to balance and juggle a lot of plates? What do we need to do to move you from where you are to where we are? Anybody want to be where I am? Owning a $14 million property or partnering on a $14 million property? Because that's the next thing, right? So I was able to get free, and now we're getting other people free. It's a better way to build wealth. We're going to guide you through vetting real estate properties. We don't want you to lose money. We want you to be collateralized in a stellar deal. So what is your collateral on these deals that are coming across your desk? We're going to talk about these things. We've got some good training that's available. And you opened up your phone and you went to your YouTube and you searched for theprestige@mayhill.com. You subscribe to the YouTube channel. We have over 80 videos. I don't know what it is, but we've got commercial real estate education. We've got market updates. 4 weeks ago, I verified that interest rates had started to come down, and now we got another good verification on our construction loan, 8% soft offer, and we're getting more term sheets as well, so we can break ground and actually take the best deal. We've got our choice because we pencil in this crazy market. Are you on a hamster wheel? John, what do you think about, spending decades to build your career, which is very, very important in terms of providing for the family, but maybe being an IT professional who's put money away in a 401k or IRA, maybe they put some capital aside and they have the opportunity to take a look around and see what their options are now.
So DL, for me, and it's kind of an honor to have, the people in this community like yourself and, and other folks that have similar projects going on. What I've found in the multifamily space in particular that has really helped me bring I guess some of my questions to bring some clarity is really this openness between the operators that are out there, yourself, the likes of some of our teachers and Phil and Shanoa, and really other syndicators, not just new construction, but I find the professionalism amongst this community has been very easy to embrace. And I use the word professional not lightly, because I think these folks that are out here, first and foremost, you said it. We're not here to lose money, right? We're
That's
all
right.
in different areas of our investment, journey. And, first and foremost, we don't want to lose money. So looking at properties, looking at opportunities that protect all that we've worked for is probably the first and foremost important for me.
Mm-hmm. And that's really good, because it doesn't matter what my reason why is, it matters what your reason why is.
Right.
And the folks on the call that really just to take a calm look at what's most important. There's great diversification in taxes. You save a lot of money. Depreciation, you save a lot of money. And there's a lot of vehicles that we could be looking at in the asset allocation of our portfolio, with alternative investments being one of them. Real estate is a hard asset. And so from a generic standpoint, commercial multifamily is a good asset to look at. So we have, let me move this border a little bit. And we have about 400 years of commercial and construction experience on our team. We're working with development services. We're working with a capital raising coach who's raised $2 billion, Brad Blazer, Warren Ellis. Carrasco, I've worked with 17 years, and he has a lot of development experience in his background too. Working on our sister property, 22 North. And here's one of the things that you need to look at when you're looking at these deals is, what is the experience level and what is the track record? You have to vet the jockey and the horse. Carrasco has also worked on 22 North in Northwest Austin, which sold for $22 million and sailed through the pandemic because it's a recession-proof asset class, being Class A luxury, not the Class C conversion, not the Class B conversion, but our tenants always pay the rent. And that would be something that if you're putting time and money into any kind of project, you want to have certainty that that return is coming. So what happened with 22 North in Austin was during the pandemic, we only saw rent specials one time. Now, the Supreme Court told the CDC that what they did with that rent moratorium was unlawful. Great. Telling landlords you can't collect your rent for a year. But Congress could do that again. So we want to, right? So we want to stay away from that, having the government in our business. And having those professional tenants, they just always paid their rent. That's one of the things that we look at when we look at deals, right? Why multifamily? Certainly not my favorite, but everybody needs a place to live. And that 30-something tenant is not buying a house like they used to, especially with interest rates having been so high. The Dallas market is a stellar market. We need to look at the market and the submarket. Dallas is the top market in the state of Texas, and the rents are higher in Dallas than they are in Austin. Professional wages are higher. And so these people need a place to live. Why Texas? You know, it's Dallas is #1 in multifamily construction. It's a great market. Dallas is #2 in all kinds of construction. Why Class A? We talked about Class A, right? We talked about good credit. They pay their rent. They pay their rent. And they're nice folks to live with. I've done the Class C conversion, held that property for 6 years, and doubled the value in the first year like we have with this one. So that was a great work. But I bought it off market. I bought it with a decent interest rate, and I got it at a decent cost. So if you look at all of the Class D conversions that were bought when the interest rates were too low, that was a weird market for me. Don't get used to that kind of market. It is an anomaly and it's not coming back. So I knew during that season that there was going to be a lot of mess coming, and there is now. And seriously, what has happened, unfortunately, is that all of those syndicators with 1 or 2 years of experience, 10 co-GPs with 1 or 2 years of experience, bought when the market was double priced. So we always buy commercial real estate with 2 legs to stand on. 1, we want to have room to raise those rents. And 2, we want to have room to force appreciation. We always buy with those 2 things intact, because if we don't get the rents, then we get the appreciation, and vice versa. If we don't get the appreciation, we get the rents. So what has happened with these mediocre deals, and you have to watch out for this, folks. They're going to show you deals that are blue sky numbers. We won't do that. We're like a medium case, worst case scenario on our valuations. So they're going to blue sky it, and they're going to say, oh, this property that we bought double priced, it has value. Well, it doesn't have that safeguard, because all that appreciation is already taken by the seller, and then they're outbidding each other. So we can laugh at it now in hindsight, but just be aware that's not a normal market. The only place for that appreciation to go is down. It's going to lose value, and they're not going to be able to refi. They're going to get stuck in that cash in refi. Weird new term for these syndicators, cash in refi. It's a capital call. So don't let them talk you into the fact that that's a normal thing that has never happened before. But we also want to build where we have room to raise those rents. And what's happening with those Class C conversions is the margins were already slim, and now the rents in most markets are flat. All across the nation, Dallas rents are high, but we have to look at it. That's our basis to buying property. That's why we started with the land. We started with the dirt. I bought it off property as an example of a stellar project. Doubled the value, worth $14 million today, has $8 million of equity to share. We started with the dirt and it had $3 million of equity already off market.
Well, DL, I think that's an important point that you bring up, and I've heard this multiple times, really in all of my real estate investment to this point, is you really are making your money on the buy. Okay, you talk about the possibility that you can increase rent and things like that happen. Those are great things and great opportunities that can happen. But your cost basis going in is really where the game gets, in my opinion, that's where you win. And the assets that you have been a part of, it's followed the same playbook both times, right?
That's right. That's right. It's followed the same playbook, and the win is in the purchase and the buy. Also, with commercial multifamily, we want to make sure that we do have room for that appreciation, and we do have room to raise the rents.
Yeah.
So going in with that mindset, I'm not buying something that's double priced. That's a lose. I'm not buying anything that has slim margins on the cash flow. That's a lose as well. We want it all. We want a stellar deal. And this is an example of a stellar deal, where no matter which deal they choose, get used to this market. It's normal. It's telling the truth. And I love this market because it's telling the truth. The mediocre deals are showing up. They're not getting their refis, and we want the market to continue to tell the truth so that we're safe. The rents in the Dallas market, rents went up 6% over the last year. Rents in Dallas are not flat like the rest of the nation in Canada, and rents in our area went up 11% in the last year. That's almost double. So we're getting our rents in the market of Dallas and the submarket where we are as well. So great point, John. Yeah, exactly. Risk mitigation. If you guys would like a copy of the slides, just let us know. Just let us know at morefreedom.com. That's the way you can get in touch with us and get a copy of the slides. We're going to give you a handout, like a cheat sheet, checklist of how to vet commercial property, so you can get all this good stuff. If you'd like a replay of this recording, let us know at morefreedom.com and we'll shoot it over. So we need to be doing risk mitigation. We have a comprehensive checklist. What's your track record? This is an important slide. It's a checklist, right? Experienced team. What kind of insurance do they have in terms of risk mitigation? That's a great way to mitigate risk, is by having insurance. So something happens and you're covered. We have high income earning tenants. That's our tenant type that is recession proof. They're that 30-something professional. They are building their career, probably no kids yet, but they're focused on building their career and paying their rent. That's what we saw in 22 North, our sister property, and that's what we're doing here. We also have an upcoming opportunity for anybody who is a sophisticated investor. It's going to be a short window, but we're starting a condo project for 1031 exchange opportunity, and very limited opportunity there to come in as a TIC. You will be vetted. And and also for sophisticated investors for a short period of time. So let us know at morefreedom.com if we can get you some information about that. Also for accredited investors, of course. So how do we source our deals? John, we talked a lot about this. We talked about making sure that we are looking at the market and sub-market. We're looking at good assets versus mediocre assets, because it's better to pass on a deal and wait for a stellar one. When you look at the Dallas market and all of the Fortune 500 companies like Wells Fargo moving from San Francisco and the PGA having moved to Frisco, what do you think when you think about those national and regional headquarters that are moving here?
Yeah, I mean, personally, I want to invest in the areas that the population is going to. I'm a Midwest, born and raised in Minnesota. Not really the market I'm looking to invest there. And
Right.
I have investment property, in Minnesota. I just haven't put, over the last couple of years, that's not the market I'm looking at. I'm looking at where are people coming, and you summed it up. The type of tenants, the type of people that are going to live in and around properties such as the Prestige. The location for me is imperative. When I'm looking at any investment, location probably weighs even higher than the purchase price of the asset, because
Yeah.
I'm not in this for 2 weeks, right? This is a long game for me. What I like is the slow and steady. I'll take my drinks of water along the way, and in the right assets with those types of checklists. When they meet those, I know I'm in the right spot.
It is vital. In our area, we have 114,000 vehicles per day turning right off of I-35. That's about 5.5 million vehicles driving by our property. 5.5 million a year. That's amazing growth in our area.
Yeah.
So if we look at some of those stats, it seems a little remote when you look at it on a map, but my goodness, it's all infill. The medical district, great base to be on in terms of electrical. All the infrastructure is there. It's a landlord-friendly state. We can get a tenant out in 3 weeks if we need to. That's important to get that unit back and get it re-rented. But the nice thing, John, about this tenant type is that they will stay 5 or 6 years. So we don't have that big cost of the turn. That's an advantage with this asset type. So I don't know, if we have a position for the folks who are watching, but here we go. Here is 22 North. Let's give a quick example as we wrap up this call. If you need more information, morefreedom.com, morefreedom.com. And 22 North was built in 2018. It's our sister property, 240 Class A luxury multifamily units built on 14 acres. It sailed through the pandemic. Everybody just paid their rent. They are building their career, they're paying their rent. And it sold for $22 million. So even the folks on 22 North did not get the kind of IRR, internal rate of return, or equity multiples that we gave. And this was a great example of a Class A luxury asset. It's on Baghdad. If you're in Austin, feel free to slide by that property this weekend. Take a look at it. We sold it in 2021. But that's that Class A luxury. multifamily tenant, probably single, no kids yet, professional tenant, always paying their rent. And we have leveraged all of that work. We brought it in with our architect, the floor plans, the asset type, the tenant type, the parking, with some tuck under garages in phase 3, and covered parking that we can charge for. Concierge services. We're actually increasing the value of and services on this asset to provide for lockers to put their, drop off their laundry, pick it up the next day in a locker, drop off dry goods, put your groceries away, put the lettuce away so that it stays nice. So that is going to fit that busy professional, because those guys are not going to pay $1,000 for rent. We want to make sure when we're looking at our team that we've got the right skill set in place. We're not talking about 10 co-GPs with 2 or 3 years of experience. So you can see John, he's got 30 years of experience helping investors to make good due diligence decisions. And right now we're just in due diligence. So just take your hand off your wallet. And we just want to continue the due diligence. So your time and money are valuable, and a good sponsor should respect both. When you get involved with a stellar deal, you don't want it to have that crazy feel to it. No crazy feelings, but we want just sound advice on how to build our portfolio and strong team, strong product. We've looked at 22 North, our sister property. We showed a case study of that. That's 22north.com. And again, the deal highlights of being able to look at a solid deal, see some success, some track record, and exactly to be able to go buy the project. Go buy 22 North. Check it out. It's on Leander, on Baghdad in Leander. So we look at acquiring the land, putting entitlements with the city. We doubled the value by doing that. So we're going to put a shovel in the ground in June. We're very excited. We begin construction and we complete construction. So this 22 North completed construction in 2018 and sold in 2021. Now, this is a normal exit strategy. We've got the sell, we've got a cash out refinance. Again, don't let anybody tell you that a cash in refinance is normal, or a capital call to do a refinance is normal. That just means a bad deal, and we don't want to throw good money after bad. So if you throw good money after bad, it's still a bad deal. We want to be careful on that, the onset of an investment, and be doing our due diligence. We're not in a buying mode, we're doing due diligence. In conclusion, we've got our actual pictures in this slide deck of 22 North. This is kind of a cool picture of the common area looking out onto the deck underneath the shade. And these are 22 North tenant type colors. They pop, and they may not be what I would choose, but that doesn't matter. It needs to be our tenant type. Okay, so as we finish this, go ahead and take your phone out, take a picture of the QR code, or just go directly to morefreedom.com. Morefreedom.com will get you information about our upcoming Quest lunch and earn on April 20th at noon. It will get you information about our investor club meetings in Austin Houston, Dallas this month on Saturdays at 3 o'clock. So if you want information about that, we'd like to come and meet us and we can get to know you. Just let us know at morefreedom.com. So let me stop the share. And I want to, I can't minimize this. Okay, let me see. I want to be able to show you if you would like to be able to get back with John and let him help you to just continue your due diligence. I welcome you to do that. So you would go to zoomingwithprestige3.com and you can type it out or you can put the number there, either one. And then just go down and book a meeting with John and see what kind of availability he has. I'm going to open up your calendar, John, and see what kind of availability, because I think you have 1 or 2 slots where you have some availability even into the evening, which is phenomenal. I mean, that's going to, right?
AJ, if you want to put that in the chat, you can as well, where they can schedule some more time.
Okay, great. So let's go back to the Zoom meeting. We're going to stop the recording, and then I'm happy to stay on to handle any kind of questions on a Q&A, and we can go into the Investor Club portal, look at a good deal if you would like to do that. Thank you.
After a lifetime of hard work and dedication, it's time to enjoy the fruits of your labor. As you enter into retirement, securing your nest egg and preserving your financial future becomes paramount. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you seek less risk, financial security, and a reliable source of income. With over 400 years of combined experience and proven track records, The Prestige is your beacon of trust. We specialize in providing safe and secure investment opportunities tailored to your retirement goals. We know that you need to rely on experts to navigate the complexities of the market. That's why our team of seasoned experts is here to guide you every step of the way. Our collateral contracts have been approved 10 plus times by Quest IRA, which is under the SEC. Here are just a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting. Love the floor plans. We've got our distribution pending in our bank account. Thanks so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't compromise on your retirement dreams. Visit The Prestige at mayhill.com today for our current and rare investment opportunities. And let us utilize our 400 plus years of experience to safeguard your nest egg and provide you with a secure investment in a low yield market. We are owner operators with daily hands-on on-site responsibilities. We are not syndicators. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your trusted partner in commercial real estate investing for retirees.